All right, we've got a couple rules. These are the Section 267 attribution rules. You don't need to memorize the rules as Rule 1, Rule 2. You just need to know the rules. Now, these attribution rules play an important role in determining related parties for tax purposes. These rules are designed to identify and prevent possible tax avoidance or evasion by individuals or entities that have close relationships or control over one another. We're going to see, as promised, a lot of math. We're going to see calculations to determine who is a related party. First rule, we've got the proportionate attribution for corporations, partnerships, estates, or trusts. Now, stock owned directly or indirectly by a corporation, partnership, estate, or trust is going to be treated as owned proportionately by its shareholders, partners, or beneficiaries, respectively. This rule establishes that the ownership interest in one entity is indirectly passed onto owners of the parent entity. I do love me some examples, something to look at. It actually makes sense. What is our example here? Well, John owns 60% of Tech Innovations Inc., which in turn owns 40% of Green Solutions Limited. So determine John's ownership percentage in Green Solutions Limited. Well, John is going to be treated as owning 24% of Green Solutions because John owns 60% of Tech. Tech owns 40% of Green, so 60 times 40, 24%. John is treated as owning 24% of Green Solutions Limited through his holdings of Tech Innovations Inc. stock. Pretty straightforward. We'll keep running through these. Now we see individuals and their ownership. Family member attribution. Well, an individual shall be considered as owning stock owned by those family members related in accordance with Section 267. This rule is going to ensure that an individual's stock ownership is combined with the stock owned by their immediate family members, such as spouse, children, parents, and siblings, when determining related party relationships. What's our example here? Well, Lisa owns a 25% interest in Bright Ideas Inc. Her husband, Mark, owns a 15% interest. Their daughter owns a 10% interest, and Lisa's cousin owns a 20% interest. So what is Lisa's ownership in Bright Ideas Inc.? We are going to see that Lisa is treated as owning 50%. So even though Lisa only actually owns 25%, Lisa is going to be treated as owning 50%, thus making this entity a related party to her. Because her 50% is consisted of her 25%, her 15% through her husband, and 10% through the daughter. However, the cousin is excluded, not that it matters because we did breach that 50% ownership here. The cousin is not a related party under Section 267. All right, in our previous example, we're still on Rule 2. In our previous example, Lisa was treated as constructively owning her husband's 15% interest. Now, we're going to determine whether her 15% ownership in Bright Ideas through her husband may be attributed to other family members. Well, Lisa's 15% in Bright Ideas could not also be attributed to Lisa's brother David, because this would be double attribution with family members from Lisa's husband, Mark, to Lisa, and then to Lisa's brothers, David. Now, what this is saying here is making sure that we're not like double counting. And we'll see right here. We got an example. Matrix Inc. owns 35% of Nexus Corp. and 50% of Orion Limited. So we see that we are trying to see, so Matrix owns part of Nexus and then of Orion. Now, Orion additionally owns 45% of Nexus. So we could potentially be double counting this here. You see, because Matrix owns Orion, Orion owns Nexus, but we also own Nexus. So we don't want to double count. This is what we're accounting for. Our concern up here is essentially what we're seeing down here. Now, under constructive ownership rules, Matrix and Nexus are related parties. Pretty straightforward there, as Matrix owns 57.5% of Nexus. So Matrix owns its own 35%, but they also own 50% of Orion, which owns 45% of Nexus. So we say that Matrix owns 50% of, and this, I know this might be like, oh my gosh, he's going on and on. This is confusing. Yeah, just stick with me. We'll get through it. Matrix owns 50% of Orion. Orion owns 45% of Nexus. So through Orion, Matrix owns 22.5%, and then Matrix also owns its own 35% through its direct ownership in Nexus. So that gives us our 57.5%. That's what our concern up here was making sure that we're not double counting anything. So making sure we're aware that that does exist, and you are good to go with your math here. This could be multiple choice questions, Sims. Make sure you're familiar with all of this. All right, moving on to Rule 3, constructive ownership treated as actual ownership. Now, stock constructively owned by a person under Rule 1, which was the proportionate attribution, shall be treated as actually owned by that person for the purposes of applying either of the rules in other situations. So it's you constructively, meaning you don't actually own it, but it's treated for tax purposes as if you actually do own it for our Section 267 purposes. Now, this rule expands the scope of the first two rules to cover situations where there are multiple layers of indirect ownership. However, Rule 2, where we deal with family members, this cannot be applied in the manner which prevents double attribution through family members. Again, we want to make sure that we do not double count anything. So in our previous example all the way back, we saw that John was treated as constructively owning 24% of Green Solutions Limited. Not too far away. Hopefully you don't forget that example. Now, we want to determine any ownership of Green Solutions Limited by John's wife, Jane, under constructive ownership rules. Well, John's wife, Jane, would have to include 24% of Green Solutions Limited, even though she's not involved at all. She's not involved. John's doing his own thing. He just owns part of that company, right? But for Jane's purposes, she needs to make sure that if she's doing business and want to make sure that she's not a related party with Green Solutions, she has to talk to her husband, make sure, hey, do you own any of this company? Am I a related party? That does come into play if you work at a large public accounting firm, specifically if we're auditing, right? If you, let's say you got a lot of, your spouse has a lot of money, they do a lot of investing on the side, you're working as an auditor. If your spouse owns a lot of stock in an audit client that you're auditing, even though you don't directly hold it, well, your spouse, your brother, that might breach some independence issues, but we're not here for the audit exam, we're here for a regulation exam, but that's just another instance of where this could play a role. Now, she actually owns when testing for her loss disallowance because the constructive holdings are treated as actual holdings for these purposes. So even though she doesn't actually hold a single stock herself, she is considered as if she did.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.